Whether if you are a long-term investor, then what time frame chart you have to look at trend, price and volume. If you are a short-term trader, then at what time frame chart you need to look at trend, price and volume. So whenever the primary trend is up, these are secondary trends which are going against the primary trend. In a primary trend, when the prices are going up, the volumes would also tend to increase. Look at the volumes. 2 billion shares that got traded in a particular month. Are you ready to lose 20,000 rupees? If the answer is yes, go ahead and buy 1,000 shares. If the answer is no, buy 500 shares.
Hello, strikers, and welcome back to the channel. This is Nimisha. And in the previous video, Zubin, I learned about the Dow
Dow
theory and
theory.
the trend cycle that you explained.
Hmm.
I really want that in this video, if we can talk about chart analysis and how can a beginner enter into trade and the charts can help them.
All right, fantastic. So yeah, as you are a beginner, uh, the first topic that we have to understand is Dow theory. So if the viewers who have not seen that video Dow theory yet, please make sure you look at that video, because Dow theory is the base of technical analysis. Now, after you've gone through that, the next step is to understand four components of technical analysis.
Okay.
What are those four components? Number one is, the first and important one is the trend, right? Which we have seen in the Dow theory. The second one is the price. All right. The third one, what is the price? Price is nothing but the interaction between the demand and supply.
Correct.
So price goes up when the demand is greater than the supply. Price goes down when the supply is greater than the demand, right? Buyers represent demand, sellers represent supply. So that's price. All right. Now, after we have understood like what is price actually, so price goes up and down. There are various patterns that are formed, which we'll be covering in upcoming videos. But understand right now over here is, if you don't learn those indicators, it's okay. But you should learn the primary indicator after price, and that is volume. All right. Volume is must. All right. And the fourth thing, the fourth component is time. So time meaning, we'll cover a separate video on time, multi time frame analysis, where you need to understand whether if you are a long term investor, then what time frame chart you have to look at trend, price and volume. If you are a short term trader, then at what time frame chart you need to look at trend, price and volume. So everything that we do, we do it with respect of the time. All right. Now let's continue with today price and volume behavior. All right. In the Dow theory, we said that whenever the prices are going up, so prices move up in making higher highs and higher lows. So how will we confirm that okay, this trend is up with respect to volumes? So whenever the primary trend is up, all right, these are secondary trends which are going against the primary trend. All right. So what will happen is, when in a primary trend, when the prices are going up, the volumes would also tend to increase.
Okay.
All right. What is volume? Volume is the number of shares traded in a market.
Correct.
Say example, how quantity, right? Let's say for example, I buy 100 shares and probably you sell 100 shares. So what will be the total volume? 100. Hands got changed on 100 shares. So likewise, in the entire day, if you are looking on a daily chart, how many shares got traded?
That is the
That is
volume.
the volume. So this volume activity, all right, it should increase with an increase in price. All right. And when the price comes down, the volume should also come down.
That is the confirmation.
Yes, that is a confirmation that the primary trend could be up.
Correct.
Now, from here, let's say for example, a price comes down to a support level, and from here it starts bouncing back. The this bounce back should appear with again increase in volumes. So now, if this confirmation is there, then a trader can buy on this breakout over here. So whenever there is a breakout, that breakout should be confirmed with above average increase in volumes. All right. So a trader can buy over here, and probably investor can simply buy here, and a trader can understand that if price starts falling down over here, is it falling down with less volumes? Then probably he can sell here And once again, when it bounces back, he can buy here once again if the price bounces up with volumes. So always understand, in an uptrend, with every increase in price, the volume, so with every green candle,
Correct.
in simple,
Yeah.
the volume should be high.
Hmm.
And with every red candle, the volume should be less.
Okay.
And vice versa in a downtrend. So if the trend is down, all right, what will happen is when the prices are falling down, prices will fall down with increase in volumes, large volumes. So there is a lot of selling happening. Big sellers are continuously selling large quantity. And what happens is in this downtrend, primary downtrend, the secondary trend is against the trend. That is, it's bouncing back a little bit. So when this bounce back happens, and this bounce back happens with less volumes, we will confirm that okay, there are sellers, the trend is down.
Correct.
So when this particular low is broken from here like this, and when this low gets broken with above average increase volumes, you can sell here. All right. So prices goes down with increase in volume, prices bounces back with small volumes, and then again the prices starts falling down. So this is the price and volume relationship. So understand, wherever you see red candles, big red candles coming in with big volumes, there is a lot of selling happening. When you see big green color candles with big volumes, that means buying is happening over there. All right. So let's look at live chart over here. Hello friends. In market, you always, as a trader or as an investor, we always come across three questions. Number one, stock selection, entry and exit. Out of 5,000 stocks, which stocks to focus on is a very big question, and to find out stock it takes a lot of time. So the best thing what I do is I use scanners. And where? My friends, I use scanners on this particular software called as Strike. On this particular software, there are various scanners out here. There is one scanner. The USP of this particular software is RMI scanner. Now, RMI is a momentum indicator where I get to know out of the Nifty 100 stocks on the hourly, daily, weekly, monthly, on all these time frame charts where all the momentum is bullish. Is it in a buy mode, sell mode, new sell mode, or maybe new buy mode? Few days ago, I spotted HDFC Bank on a daily chart where this particular momentum indicator had given a buy signal over here somewhere at around 1750-55 levels, and from there on in a couple of weeks the prices rose by around $100. Similarly, if I want to find out stocks going tomorrow, then I simply have to click here, and instead of buy I just have to select new buy, and I'll get a list of stocks on a weekly chart where all stocks out of Nifty 100 stocks, where all momentum indicator is giving a new buy, and I just click, and the right hand side the chart opens up with the predefined settings. So my friends, if you also want to quicken and fasten your analysis time, Strike is a platform that you must use. Okay. Over here, what do we have is we have a chart of BHALE. Let's assume you are an investor, so we are looking at a monthly chart of BHALE. So what is happening is the trend right now is clearly down. Correct. Yeah, the trend is clearly down. Yeah. Now what is happening is in this downtrend, there is some volume happening. Correct? Okay. So already the prices have fallen down from 330 to 22. More than 90% the prices have already fallen down from 2011 to 2020. So maybe in 10 years, the prices have gone down like anything. All right. Now what's happening? Now look at the volume.
We are
With
seeing
these,
increase in volume,
yes,
green candles.
now when you saw this one and two big green, the candle size are comparatively average, but look at the volumes. 2 billion shares that got traded in a particular month. Now if I want to ask you, who has the power to create this 2 billion shares, a retailer or an institutional player? Institution. Now the prices have gone up, that means the institutional player has bought into it. Yes. Correct. So if institutional player have bought into it, what can a retail player do? They can sell, or they can wait for the market, or probably simply buy. Buy. Just be behind them. Yeah. If see, institutional player, they have more knowledge and more money than a retail player. Correct. All right. So if institutional player will never buy any share blindly, no. They will do lots of research, and after doing lots of research, they will put thousands and 10 thousands of crores into buying a particular stock.
Retailers can
So
buy
if we
at
have an evidence on this particular chart that the institutions have bought, why do we need to do any further analysis about that stock? Can't we simply buy? Tell me, Nimisha, can you buy simply 1,000 shares over here at around 35 rupees? So your investment will be 35,000 rupees.
Yes.
And what will be the risk? The risk is that prices can come down also. There is no guarantee, right? Of price definitely will go up. The prices can come down. So in you have to put stop losses. So where will you put stop losses? Below the low. Maybe let's say 18 rupees. So from 35, rounding it off to 15 rupees, 20 rupees is the risk.
Yes.
So are you ready on 1,000 shares, 20 rupee risk? That is 20,000 rupees. So are you ready? You have to ask this question to yourself. Are you ready to lose 20,000 rupees? If the answer is yes, go ahead and buy 1,000 shares. If the answer is no, buy 500 shares. All right. Then you have to ask again, am I ready to lose 5,000 rupees or 10,000 rupees in this case, right? If the answer is yes, go ahead. If not, work for a lower quantity.
Yes.
Did you understand that?
Yeah.
Okay, so let's assume, you are okay buying 1,000 shares over here and ready to lose 20,000 bucks.
Okay.
All right, let's see what's happening now. See, because there's a high probability, volume is there. Institutions have bought into it. All right, so your stop loss has not hit yet. All right. See now, with a red candle came lesser volume. Can you see this? With red candle came lesser volume. All right. With green candle comes bigger volume. So this is confirmation that this minor top has been broken out with increase in volumes. So this is confirmation. Your 35 rupees stock is already 48 rupees.
Yeah.
You're already making 10,000 bucks. Right? So now what to do? Simply trail your stop loss. Make sure that you do not lose money over here.
Yes. Yes.
Right? Look at this. Now look at this. 71. So 35 stock price comes up to around 70, 80. So you have almost doubled. Can you sell 500 shares and secure your capital?
Yes.
Yeah.
Yeah.
So we are learning risk management also along with this.
Yeah.
All right. So the risk management meaning your capital should be secured.
Yeah.
Right.
And we should, like as you mentioned, we should like also consider the stop loss.
Yes,
when
and
we are-
trail the stop loss.
Yeah.
Keep trailing the stop loss so that you don't lose money.
Okay, so when once we have reached at a certain amount,
Hmm.
for example, here it has doubled
Hmm.
from 35 to 71.
Hmm.
So that means we should not still wait, like keep the stop loss here. We should increase the stop
Yes,
loss.
keep increasing the stop
Okay.
loss. Okay. And wait for longer term. All right, long term. If the company is fundamentally sound, you can wait and have a look at it. This is what you get.
Correct.
This is what you get. So 35 rupee stock going up to about 300, almost 10x returns. All right, within around 4 years. So this is how simple price and volume action, it can do wonders. All right, let me show you one more example. Let's say NBCC. Have a look at it. NBCC few days back over here, what was happening? The price over here, it was going up with increase in volumes. Now when it came down, volumes also came down.
Yes.
Right. Now what's happening? Now with a green candle comes a big volume. All right. And if this high is broken with volumes, what can we do? 39 rupees stock can we buy?
We can buy.
We can buy. All right. And look at this. That's done. So that's how easy it is. Just if you have some patience, because this is a monthly chart.
Yes.
So see, learning is very easy, but application and waiting, having patience, that is a quality of a good and a professional trader. Placing stop losses without fear. So that's how this price and volume works.
Okay.
All right. 4 components of technical analysis: trend, price, volume. And now in the next video, what we will be covering is we will be covering time.
Okay.
Any doubts?
No.
Great, fantastic.
Thank you. And I've really learned about a very interesting thing, how price and volumes work together. And as Zubin mentioned also, it is very important to keep the stop loss and have a better mindset while trading. So I have learned a lot, and I hope you have learned the same. In the coming video, as he mentioned, we will be covering about time and time frames in the stock
Yes.
market. So stay tuned with us. Until then, share and subscribe to our channel.